Opinion that is coming in on the global picture, but let's now talk about all of the cues that you need to track as we get into a fresh trading session. We have our research team here with the trade setup. So Ekta, Nigel and Vahishta all join me now to run you through the trade setup and all of the individual stocks that you should have on your radar today. Guys, a very good morning to all of you. And Ekta, let me come to you first. Take us through all of the cues that we should track. We were, of course, just going through the global setup as well.
Thanks for that. Well, yes, yesterday the markets did see a bit of a recovery which took place. So the markets closed with minor cuts following what was a sharp recovery that we saw in the last half of the trading session. Remember that it was really the tale of two cities in the first half. Global recession concerns as well as the BOJ steps really weighed on sentiment, and that seems to have played out in terms of the global markets as well overnight. But nonetheless, the FIIs net bought around 455 odd crores, which is definitely a positive, and the DIIs were step in step. We don't see that too often, where both the institutions were net buyers in the market. But nonetheless, remember that the gross inflows are probably going to taper down as we go into the holiday season. US snapped a 4-day losing streak. Asia is mostly higher at this point in time, and the SGX is now indicating a bit of a positive start. Whether or not we manage to sustain those levels or that sentiment continues through the trading session without any sort of selling pressure. Now, crude has settled higher on a weaker dollar, so it's currently trading at around $80 per barrel. So that continues to be in this range of around 79 to 80. Now, a couple of cues from the outside, just to mention, the health minister has indicated to review the COVID situation in the country simply because of the rising cases that we've seen globally. Separately, we had the RBI December bulletin, which you had alluded to as well, where CPI is projected to rise, but they are possibly positive on capex. SEBI board meet outcome as well is something to take note of. We do have the RBI minutes in today's post-market today, so that will be something to take note of in tomorrow's trading session.
All right, Ekta, thanks for running us through all of those cues that we are tracking this morning. Let's also talk about the individual names that you should have on your radar today. And Vahishta is here with that entire list. Good morning, Vahishta.
Good morning, Pavitra. First up, let me start with City Union Bank, which has announced a divergence in NPAs of 259 crores, which consists of 13 borrower accounts for an amount of 230 crores and 218 borrowers for an amount of 29 crores. This is for the year ended March 2022. Also, there was a divergence in the provisioning of 40 crores for the same period. Moving on to GAIL India, which has raised approximately 1,500 crores via the issuance of non-convertible debentures on a private placement basis. Shyam Metallics has concluded the acquisition of Mittal Corporation and further strengthens the metal portfolio by entering the stainless steel wire rod and bar mill. And the capex spending shall grow all the way to 10,000 crores in the next 5 years. This is to meet the organic and inorganic growth plans through the internal accruals. VIP Clothing has sold its Umbergaon factory and raised approximately 10 crores from it. The capital which is gained by selling the asset will now be utilized in the business at a different level, from all the way from production, for technology, innovation and for marketing needs. Minda has entered into a license agreement with Accentec, which is in Korea, to strengthen its advanced automotive sensors product portfolio. The company specializes in mobility parts centered on sensors and actuators with manufacturing facilities which are in Korea, Vietnam and China at present. Dixon Technologies has received incentives which are amounting to approximately 140 crores for mobile manufacturing to Foxconn India and Paget Electronics, which is a subsidiary of Dixon Technologies. And the last stock that I'll be talking about is Jubilant Food Works. Domino's has launched 20 minutes delivery across 20 zones in India to deliver pizzas to its customers.
All right, Vahishta, thanks a lot for running us through all of those individual stocks that we should have on our radar today. Finally, let's also talk about the cues from the futures and options space. Nigel, we did manage to see that last hour recovery, like Ekta was just pointing out as well, especially at a time when the rest of the Asian markets were falling all around us.
Well, you said it, Pavitra. In the last couple of days, we've recovered from around 18,250 and 18,200 odd. And 18,000 yesterday, we did recover from there in style, actually, on the Nifty. The Nifty Bank, though, that recovered close to 350 to 400 points from the day's low, and it continues to hover around the 20 DMA. Now, the Nifty December futures, remember the start of the series, it was more than 100 points odd. Now it's come to a more realistic level of around 39 points odd. We have expiry that will play out in the next week or so, and the positionings as well have been lightening, and that was evident in the Nifty Bank. Now, the Nifty Bank, the open interest yesterday was down by close to around 10% odd. Looking at the FIs in the F&O market, well, surprise, surprise, they added shorts big time. Yesterday, they added close to around 17,000 short contracts. On the long side, they unwound some positioning. Now, the positioning on the index futures, well, it's turned net short. Remember, at the start of the series, it was net long by a margin. Close to around 77% of their positions were on the long side. On the option side, yesterday, they bought some puts in case things go wrong. Then there is some cushion on the downside. They also wrote calls aggressively yesterday. So, some bit of caution coming in terms of index options, but the volumes itself are so low. Two strikes to highlight which are active in trade: 18,300 call and the 18,200 put on. The 18,300 call, it appears it's continuously getting written. So the stop loss out there comes in at around 18,450 odd. On the downside, though, that 18,200 odd mark is seeing a fair bit of action. So that's telling you that that's the level the bulls want to come in and buy. So let's get the levels actually up for you. Those are the crucial levels. And also we'll get the 20 and the 50 DMA, where in this band, breaking of these levels, well, that'll give us further direction. For starters, though, the SGX Nifty is suggesting a green start. So don't chase the gap up. That's been, the thesis. So stick to that. Back to you.
All right, that is the trade setup for today. Nigel, Ekta, as well as Vaishya, thank you very much for joining us and prepping us up for this trading session. With that, it's time for our first short break on the show. But on the other side, like we told you, market regulator SEBI says it will phase out open market share buybacks. It also greenlights the execution-only platform for direct mutual funds. More on that important story when we come back. Hey guys, welcome back. You're still watching Power Breakfast. Now, like we told you, market regulator SEBI, after its board meet, has made some crucial announcements, including changes in buyback regulations, as well as investments into direct mutual funds. So Yash is here with a roundup of all of the latest announcements. Hi, Yash.
Well, that's correct, Pavitra. Good morning. First of all, market regulator SEBI in its board meeting yesterday has thrown some important amendments when it comes to the buyback regulations. The big message which came from the board meeting was that the market regulator wants to phase out buyback through open market or stock exchange mechanism completely by April 2025. But in the meantime, regulations there, that is open market buyback, have been made more stringent, like increasing the utilization of amount earmarked for buyback to 75% from the current 50%. Tender route for buyback is the more preferred one for market regulator SEBI, and here some relaxations have come through this particular board meeting. I'll just name a few of them. Market regulator SEBI has allowed an upward revision in the buyback price till 1 day prior to the record date of the buyback. Also, they've removed the requirement of filing draft letter with SEBI for such a buyback. There are more relaxations in the pipeline which would need a ratification from the Ministry of Corporate Affairs, and they are in discussion. That would be increasing the maximum limit of buyback to 40% of the paid up capital of free reserves of the company from the current 25%, and allowing net debt-free companies to have 2 buybacks in the same financial year. Apart from that, market regulator SEBI also spoke about the delay which has been coming in IPOs after the DRHP has been filed. SEBI said that the regulator can't be blamed for IPO delays. Many merchant bankers have been repeat offenders when it comes to not providing the appropriate information to market regulator SEBI, and now what will happen is that in case a delay from the merchant banker, the DRHP papers will be returned and will be disclosed on the SEBI's website. On increasing trading hours, interestingly, market regulator SEBI said if exchanges want to increase trading hours, they can go ahead and do that. There is no interference from SEBI, or there's no restriction from SEBI which stops them from doing so. Certain important large brokers will be given a status of qualified stock brokers. They'll have to comply with enhanced monitoring guidelines from market regulator SEBI. Onboarding of FPIs have been made easier. REITs and InvITs corporate governance norms will apply on them as well. There are a few more regulations. We'll of course keep talking about them throughout the day.
That is a lot of announcements from the SEBI board meet. Yash, thanks a lot for filling us in with all of the details. The other story that we are tracking is that the Reserve Bank of India's latest bulletin has highlighted that reduced input cost pressures as well as buoyant corporate sales could herald the upturn of India's capex cycle. However, it has warned that there should be no letdown of guard against inflation. So Ritu is here with all of the details. Ritu, take us through the takeaways from this latest bulletin.
Well, first, a disclaimer. The papers in the bulletin reflect the views of the authors and not of RBI as an institution. But that said, these are written by prominent people, which include deputy governors of RBI, and are therefore regarded as important views. So let me start with what the paper says on the state of the economy. It says the near-term growth outlook for India is supported by domestic drivers and waning input cost pressures. Still buoyant corporate sales, turn up in investments and fixed assets are all heralding the beginning of an upturn in the capex cycle, which it says will contribute to a speeding up of growth momentum for the economy. There's also a study on inflation, which is led by RBI Deputy Governor Michael Patra, which analyzes the CPI trajectory in India post-February and finds that inflation surging above the upper tolerance band of the MPC target was kick-started by a series of supply shocks. But what started as a shock to food and fuel prices got increasingly generalized over the coming months, and a swing in inflation from goods to contact-intensive sectors is generalizing inflation and making it persistent. That said, with CPI still hovering at high levels, there is no letting down of guard by the RBI. Finally, an important and interesting paper that provides some estimates on India's digital economy, which shows that the core digital economy accounted for 8.5% of GVA and the digitally dependent economy around 22% of GVA as of 2019. The digital economy, it finds, grew 2.4 times faster than the Indian economy, and employment estimates, it finds, showed that 4.9 million people were employed in the core digital sector and around 62.4 million people in the digitally disrupted sectors, again highlighting how important digital is becoming to the overall state of economy.
All right, Ritu, thanks a lot for getting us all of the highlights from RBI's latest bulletin. With that, we have to get into another short break, but you don't go anywhere, because on the other side, we're going to track all of the action from the commodity market. Stay tuned for that. Welcome back. You're still tuned into Power Breakfast, and let's talk about the commodity cues now. Manisha joins us with all of the action over there. Hi, Manisha. Good morning.
Morning, Pavitra. Thank you for that. Well, I'll start with the crude oil prices, where we are seeing it back above $80 a barrel. This is because the U.S. crude inventories have seen a sharp fall by 3.1 million. Market was anticipating much lower than this. And then Russian seaborne crude shipments also fall post the G7 sanctions. Markets are still assessing the exact numbers. Also, the Keystone pipeline, the full return of that is postponed by a week. That has been adding premium to prices. The U.S. will refill its petroleum reserves. The inventories there are at a 30-year lows, and the expectations of a major U.S. winter storm are some of the factors which have brought crude oil prices on the higher side. But it is very strong gains that we are looking at in the bullion sector as well. The gold prices gained by 2% overnight. Silver is back at around 8-month highs. This is after Japan tweaks its ultra-loose policy for the first time in decades, with the expectation that there could be tightening policy for the next year, etc., is what has been supportive. Not just gold and silver, platinum, palladium, all of that gained up by 5% as well, and the industrial metals gained up anywhere between 1 to 3% overnight as well.
All right, Manisha, thanks a lot for getting us all of that action from the world of commodities. On that note, we're going to wind down with the news that Asia is not seeing any big moves, but it is largely higher right now. Nikkei is back in the red right now. The Dow futures, by the way, holding up very well, 215 points higher there. The SGX Nifty indicating a 75-point bump up. Thanks for tuning in. Bazaar Morning Call comes up in 2.